I initially bought my first home in 2017. That home had a large lot, and I knew that there had to be some sort of utilization of that lot. So that's what got me thinking and got me looking into ADUs. And that was in 2019 that I built my first ADU. That one was rough. And actually, I started the whole process in early 2019 and didn't get permits until March of 2020, which we all know what happened there. But the learning experience from that led me to understand the opportunity here. So remodeled the front house, built that one. So I bought the house for 335,000, remodeled the front house, and then built the ADU for 100,000 there. And then after I built the ADU, the house appraised for 785,000 about a year later.
So we're sitting here with Christian Ballow.
Yep.
With Momentum Capital Group,
Yeah.
the king of ADUs in San Diego. How's it going, Christian?
Thanks for having me.
Tell me a little bit about what you guys are up to over at Momentum Capital Group. It seems like you guys are doing some big things in the Claremont neighborhood.
Yeah, I'm Christian Ballow. I'm with Momentum Capital Group, and I'm also a real estate broker here in San Diego at a small family office down south. But I do a lot of deals all over San Diego. My main focus right now is split between the real estate brokerage and Momentum Capital Group, and working really towards growing Momentum Capital Group and building a massive team and a massive offering to different investors. And we focus on ADUs and specifically single family conversion to multifamily. So we're taking a single family home and converting it to anywhere from 3 to 15 units in central San Diego area. So right now our focus is on a few areas, which is Claremont, Linda Vista, and Bay Park. But as we expand our investor pool and as we expand and grow, we will need to move into different areas, and a lot of the central city of San Diego areas are great for what we're looking for. One thing I like to preface with what we're doing is most people have a negative take on, that conversion, throwing a bunch of units on a single family home, blowing up a neighborhood, not having any parking, or just making overall the neighborhood feel not as great as it was before. But one thing we're doing is we're buying single family homes that have been way under, not taken care of, really an eyesore in the neighborhood. And we're renovating those single family homes, bringing up the neighborhood with us, and then adding units. So the issue in San Diego is there's no housing, and what housing is available is unaffordable. And that just comes from as a direct result of no housing. And so we're trying to solve the housing crisis by taking some of these homes that have a lot of extra space in their backyard or on their land and adding multiple units in order to provide some more housing in San Diego and try to make that housing a little bit more affordable.
That's really interesting, Christian, because I feel like that is a big misconception with ADUs, right? Like it's a bad thing, but
Yeah.
you're actually providing more affordable housing for people who would otherwise not be able to afford it. So it seems like a real win-win.
Yeah. And I think the people or the misconception of it being a bad thing comes more from ruining the neighborhood and throwing a 3-story building in a neighborhood with all single family homes. And that's not what we're doing. We're focused on properties and locations that those multi-units make sense. So we're not going to go into a single family neighborhood and throw 15 units behind a home that has the space but is surrounded by single family homes. We're going to, on a property like that, we'll put 1 to 2, maybe 3 units. We'll really imitate what the front house looks like. And there's a sense of privacy between the neighbors, the front house, and the rest of the units. And we'll really maximize the value to the neighborhood. We're not trying to affect the neighborhood negatively, and we're trying to imitate the fabric of the neighborhood, because that helps us with tenants, having great tenants, keeping the occupancy high, and really maximizing the value as we go to sell or rent these properties out.
And something I learned from you, I think recently when we were chatting, was I always thought an ADU was, it had to be in the back of the house. That was my perception of an ADU. And you said, no, actually there's all these variations of ADUs, like building on top of the house, et cetera, et cetera. Can you tell me a little bit about the different options you have, or different
Yeah.
styles or strategies you utilize?
Yeah, so there's so many different aspects and strategies you can go in terms of the ADU process, and California's really pushed this as a viable option. And California's been pushing this for about 4 years now. ADUs were a thing before. It was granny flats they were known as before that, or mother-in-law units. In 2019, 2020 is really when they started pushing it more and more. But as far as the avenues that you can build an ADU or place an ADU at your home, there's a ton of different avenues, and that's garage conversion. We don't have many basements, but basement conversion. You can add an ADU in the backyard. You can throw one on top of your house, throw one on top of your garage, and in some neighborhoods, you can throw it in the front yard, depending on your setbacks. But there's plenty of different spaces that you could add ADUs. I know that ADUs are an extremely good way to create a house hack and create some revenue and make affordability for your own home really helpful.
Awesome, Christian. And we kind of just jumped right into the ADU thing. That was front of mind. Can we take a step back? Can you tell me a little bit more about, you're hearing a lot about ADUs
Yeah.
within real estate niches as a super profitable technique to utilize right now?
Yeah.
I'd love to hear about how do you go down that path?
So the path started, I initially bought my first home in 2017. Shortly thereafter, bought a second home. And when I moved into that, so I started the remodel, and that home had a large lot. And I knew that there had to be some sort of utilization of that lot. It was just completely underutilized. And even without the back half of the lot, I still had a very large yard on that property. So that's what got me thinking and got me looking into ADUs. And that was in 2019 that I built my first ADU. Regulations have changed massively, expanding what you're able to do, really supporting pushing ADU growth and pushing development of properties. But it started there. That one was rough. It took a year to get permits. And actually, I started the whole process in early 2019 and didn't get permits until March of 2020, which we all know what happened there. And so that permitting process was so long and drawn out. And then, the shutdown happened, and as cities started to figure out how to keep things moving, that stalled a lot of things. So there was a lot of things driving those delays and taking so long. But the learning experience from that led me to understand the opportunity here. So built that one, remodeled the front house, built that one. So I bought the house for $335,000, remodeled the front house. It was a total gut, and then built the ADU for $100,000 there. And then after I built the ADU, the house appraised for $785,000 about a year after originally purchasing.
Just light bulbs going off.
And so what I was able to do there this was before the light bulbs went off. I knew it was a good avenue, and I really needed to pursue it, but I was able to cash out, refinance, and pull out all my money, inclusive of down payment, the building of the ADU, and the remodel of the front house, plus an additional 30 grand. So I pulled out 225,000. I used that money. I didn't really know what to do with this strategy and how to scale it. I had the idea of syndicating and multifamily and learning that process.
This was back in 2021, you said?
This was in 2020 when I refinanced it. So I went and bought 24 units in Cincinnati because I thought I was going to go pursue syndications and multifamily and learn from that, and really came out of that positive and sold the properties a year later. But during that time, I took another look at my strategy, and that's where I pursued ADUs wholeheartedly. I went to every property I owned at that point in San Diego, and I submitted a ADU permit. And at that point, I decided I was going to go all in and learn everything there was to learn about ADUs. And along the lines, I learned a few things from the multifamily side and syndicating, and knowing that I had to raise money in order to scale this. But yeah, that's what leads me to today. I've done now I've completed 6 ADUs, 6 projects. I've got another, now it's 12 ADU projects in different phases of development. So most of those are in permitting, few in design, and a couple that have just been approved for build. And the goal is to build 9 projects this year. And the key was just how successful that first one was and how much meat on the bone from building and developing these units were.
I love how you just jumped in. I know you said there was a bunch of learnings you had from the first one, and someone might hear that and be like, "Oh, all this stuff go wrong." You just took action. You learned the permitting process was long. That there was all these bumps along the road, so you could optimize for it for the next one, right? You wouldn't have known that unless you took action. I love that. And what I love what you're doing with your strategy, Christian, is focusing on a niche.
Yeah.
I think it's so understated. Like I'm focusing on the boutique hotel niche. You're focusing on the ADU niche. And I think so many people get enamored with, I'm going to go buy commercial, a 200-person apartment building because that's what they hear everyone's doing. Where you're going to be competing with everyone else. The fact that you're focusing on this ADU niche in specific neighborhoods and just being the master of your craft in these neighborhoods, I feel like is so powerful.
Yeah.
And is super understated. I think it's a great strategy.
Thank you. Yeah, I think there's a few learning, like you said, learning curves around there, and like I chatted on, and actually some of them I'm still going through. If I let those experiences, I call them learning curves, but some would call them failures or whatever they want to call them. But you take those as learning experiences and you grow from them, and you decide to focus in a different place or switch. You don't call it a just failure. You just switch or turn off and on some switches and dial one part of that in, or figure out what drove that issue. Like having a permit, currently I have 2 permits that have been in processing for 2 years. They're in a city that I've decided to no longer build in and no longer develop in within San Diego. But that's something I learned with my own money, my own deals, my own processes. And that's what made me so confident to take this finished and final product that I've really worked on for 6 years and start to bring on investor capital and really maximize what I could do for San Diego and what I could do for investors.
So tell me a little bit more about if someone wanted to invest with you, kind of the benefits that they're getting, and why invest with Christian?
I think that's like, there's a lot of benefits. There's a lot of pros and cons in any investment. We hit on it earlier in terms of like the tax benefits and all these different things that come in within our fund. We don't even promote the tax benefits and all the other benefits that you are able to gain from investing in our fund. Our main focus is just the returns we're able to employ, the issue that we're solving. The biggest benefit is the returns. It's a development investment. So we're taking a single family, converting it to multifamily, and we're able to build these ADUs and room additions and conversions for $300 a foot when it's trading on the market for anywhere from $7 to $1,000 a square foot. So we're really focused on that margin that we're able to take, and the more units we could build within reason, the better we could do there. So investing with me and Momentum Capital Group, our team has a ton of experience, and then my experience in San Diego and my experience with my own money. I feel like I've gone through the ringer with all my previous deals. I've now built 2 units in Claremont, which is where one of our focus towns in San Diego. I've built 6 units or 6 projects in other cities, and I learned from those that what to do, what not to do, and where to focus and what to focus on, and the systems to build and the team around us. And I've gone through different engineers, different designers. And so I think that's the biggest value, is I've done it for so long in city of San Diego and San Diego in general, that just gaining that experience with investing with me, as opposed to maybe trying it yourself, gives you, a few years leg up from just going out there and learning it yourself. I made plenty of mistakes on the first one. Don't get me wrong, I'll continue to make mistakes as we scale and as we learn new things, but our team will always, be transparent and, express what's going on at these properties. And I believe that what we can do with these properties is going to be incredible for our investors.
I remember when you were telling me about kind of the equation. It's an equation more or less. Hey, we buy at X amount per square foot and we sell at X amount per square foot. I
Yep.
was like, wow, it's pretty crystal clear. And obviously there's challenges and nuances and things you have to overcome along the way. But it sounds like these deals you're buying, it's pretty straightforward.
Yeah.
There's no investment in the world's risk free, but it seems pretty low risk. And correct me if I'm wrong, it seems like the absolute worst scenario is some black swan event hits the US and you're just holding this deal for a little bit longer than
Yeah.
you would,
Yep.
but it's not like someone's going to be in a situation where they're going to lose their money. They're either making the returns that you project now or, black swan event hits and they're waiting a little longer, but it seems like a pretty symmetrical bet for most folks.
With all the narrative out there of how negative the market is and how we're on this cusp of, all the news puts out, which is kind of counterintuitive to what's actually happening if you're in the market and you're buying or selling. If any of those things happen and we absolutely see a crush in the market, we've built that into our model. So we would have to see almost 30% dip in the market to even start to break even. So we've built that into our model. We've built extreme cost cushions in terms of our construction costs. We know when COVID hit and supply chains and everything like that stalled, we built that into our model. Something crazy could happen with supply chain, something crazy could happen with the market, and we'd still have enough cushion in there to sit on the property and have the cash flow come in, refinance the property, pay back a majority of our investors. So we've built in a lot of risk controls into this deal, into our fund. And then the other thing is that you see with other deals is they're severely focused in one, maybe two assets. We decided to go with a fund model so that way our investors would share the risk and the reward. If one deal does okay and the other deal is a home run, they share in that. You're not syndicated into one deal and you don't share in the other. So we've also brought that to the table. But I think the amount of controls from just the way I've seen the market experience 2008, I was still in high school then, but I had enough knowledge to experience how difficult that was. We built that into our model to try to offset as much risk as possible. Another thing we looked at as we go to develop these properties, we plan to hold them for about almost 2 years. That's just the timelines of development. We didn't build any appreciation into these deals. We focused, like you said, solely on the margin between what we could build them for and what we could sell them for today. Supported by comps, supported by, cap rates, all of that involved. And so we really just didn't build many risk issues into our model or over predict the market appreciation. And I think all those combined has led us to have a very simple model, but a simple model that has a ton of risk controls.
Love that. So yeah, Christian, tell me a little bit about kind of the mindset that went into getting into ADUs and also some of these failures along the way. Like a lot of people would hear this, and I think a lot of people would have failures with the city and just say, this sucks. This is too hard. Like I tried, but I'm going to go a different route, but you persevered.
Yeah.
And you push through a super challenging niche where there's a lot of challenges. And I'm sure that's what makes you successful. A lot of people don't want to, learn those things. So tell me a little bit about that mindset.
Yeah. I think the mindset came through, I feel like that mindset shifted where that mindset was then versus now and how that continues to evolve and what you need at that certain point in time, what education you need, what support system you need, what mentors or masterminds you need around you continues to evolve. And, I think evolving with that is the biggest key for me. But where I started, it was solely focused in education. The education aspect to learn what you can about systems, learn what you can about business and scalability and different aspects. So I focused on working hard in education at the front end. And that slowly evolved. That education piece evolved to hiring coaches, joining masterminds. And now what I'm really focused on is outsourcing and expanding the personal time I have, and my mindset around that is creating a positive environment and allowing myself to give back to others from what I've built over the years. But I think mindset for me comes from education, the support system, and I think the biggest thing now is health.
That
Health
Yep.
drives everything.
Yep.
And for a while there, I got pretty unhealthy and didn't really care much about health. And it was work, work, work. And that's where you've got to find that balance of what mindset you need in the current environment and not letting failure kind of knock you off that mindset. And if it does knock you off of that mindset for a few, months or weeks, not allowing that to keep you down and just keep persevering.
Totally. Your point about health can't be emphasized enough. So for a couple reasons, if you're super unhealthy, and you die,
Yeah.
I mean, not to be morbid, there's no more time on the
Yeah.
clock. Or if it puts you in a situation where, you just can't work as hard or as long anymore. But also just on the day to day, just feeling good.
Yeah.
And the energy levels and putting your best foot forward. It seems counterintuitive, but taking that time for yourself every day to take care of yourself is so important. I also really interesting what you said about kind of outsourcing some of these tasks. And the way you did it is the way I recommend it as well, right? Which is, you work super hard, you educate yourself on the front end. When you're first starting out, you're not going to be able to just outsource tasks, nor should you. You need to put in the work.
Yep.
And you need to educate yourself. That's step one. But once you get to a certain point, you have that tipping point where you have enough capital and your time is worth a certain amount of money, it behooves you not to start outsourcing stuff.
Yeah.
So I know you and I were chatting the other night about like potentially, since we live pretty close, like splitting a cook or someone to do the dishes.
Yeah.
And it's, someone hearing that is like, oh, it must be nice. It's like, I'm not doing that because I'm too lazy to do it. It's just, I know what my time's worth and I know, what your time's worth.
Yeah.
And like the hour and a half in the kitchen cooking and cleaning is not a good use of my time. I'd rather pay someone to do that so I can work on those higher value activities.
Yeah. I think that's like critical. And you outsource so much in your day to day. You have an assistant, you have a VA, and then you get home and you do these tasks that are, $10 an hour tasks when you could potentially be doing $100 to $400 an hour task that replenishes yourself and replenishes who you are and, gets you out meeting friends, hanging out with friends and building relationships and improving your health. But we're so focused on, well, I've got to do some yard work and I've got to do the dishes and I've got to cook my meals. And if you enjoy doing those things, don't get me wrong, like you've got to do those things if that's what brings you joy. But it doesn't bring me joy. It doesn't do what it doesn't improve my situation by doing the dishes every day. So if I can bring someone in for that, I feel like it doesn't land very well for listeners. That's just part of their day to day. But as you scale and as you outsource, you have to look at everything.
Totally. And I think people would be surprised on how cheap it could be. Like if you actually start looking into people, it's not a crazy amount. So I think it's a good route to go for,
especially when you start like door dashing and you start eating out, 4 or 5 times a week. And not only is it unhealthy, but it's expensive.
Yep, absolutely. So Christian, tell us where Momentum Capital Group is going next, what your guys' goals are for the next, call it 12 to 18 months. Then tell us, wrap things up, where people can find out more about you, more about Momentum Capital Group, and hit you with questions.
Momentum Capital Group, I think it's extremely exciting where we're going and what our goals are and what systems we're slowly building and the team we're putting around us. But Momentum Capital Group, we're at the tail end of our first fundraising, which is a $4 million fund, and we're acquiring 8 homes in that fund. We will open another fund shortly thereafter, and our goal is to raise $50 million over the next 18 months and acquire about 100 to 120 homes all across San Diego and California as a whole, and really pursue our ADU strategy and single family home conversion to help do our part in terms of the housing affordability within Southern California. I think one of the big driving factors of us scaling and growing is our team's willingness and need to give back to the community. And I enjoy giving back both time and money. And I think this allows us to also give back to investors and help people create wealth without them having to learn all that I've had to learn and all that my teams had to learn over the years investing in real estate, investing in businesses, and building businesses. So I think where we're going is super exciting. If you want to reach out, if you'd like to invest, you can always reach out to me on Instagram. It's Christian Ballow. My email is christian@mmtmgrp, so momentumgroup.com. And just shoot me a message, shoot me an email. I'm also a real estate broker here in San Diego, so reach out to me on Instagram for any information or knowledge that you need about the San Diego market and how I could help. Yeah, happy to help. Happy to talk real estate all the time.
Awesome. Well, it's great having you on, Christian. Thanks for joining. I'm sure the listeners will really appreciate this plethora of information with ADUs.
Thanks a lot, Jake. Appreciate it.